Keep watching as I show you how you could have added 4 more trading opportunities on our campaign on gold during January. Hey guys, welcome. Darren here, and we're just going to add 4 more setups to our gold campaign after the 6 trades we showed you throughout November and December. And it's all been long trades up until very recently. So let's dive in and have a look. Obviously, we've got our disclaimer. Everything we speak about today is based on education only. Now, there's our gold market. That's a daily bar chart. And this was December 25, running into the start of January 2026 here. That little day there is New Year's Day. And we've got a bit of a profit target area around the 5,200 mark. But today we're just going to look at just getting in and out of this market and taking our gains and waiting for the next trade to come along. And we'll discuss how else you could have traded this market at the end of the video. Okay. So like I said, that was January the 1st. That was the Friday, and then in we go into the Monday. And the research we've done during last year on this market, Mondays are very important for us, especially after a weekly swing. Now, my trading plan from my back testing allows me to enter as we go back up past the open, as long as we don't travel down more than 14 points. Okay, and this was very close, but we didn't quite get down to the bottom of that pink area, which sort of becomes my stop loss area. As we come back in, I enter one tick above that entry there, and I'm in and off we go. Okay, so as I said, this was the 5th of January here. My reward is 10 times my risk. So this green area will be 10 times larger than the pink area, which is my stop loss risk from entry down to where my stop loss is. And as you can see, the day went pretty well to start with. And we almost reached our target the very next day. But if that wasn't enough, we certainly made our profit target here on the Wednesday, and we're out with our target there being hit 2 days, Monday, Tuesday, Wednesday. Looks like the start of Wednesday there, we would have been taken out. So just that summary, these top 2 are going to remain the same all the way through, as is our 10-to-1 reward to risk ratio. I've just gone with a $5,000 account. Everyone's account is different. And then whatever your account size is, we only risk a maximum of 5%. So obviously you can change those figures to suit. So that means the risk would be $250. Then the reward would be 10 times that amount. And that took 3 trading days at the very most. So happy with that setup. Early days into the new year, good way to start 2026. And then the very next week, again on the Monday, this is the 12th of January, I put in my entry. So if we don't travel 14 points down and we come back to the open, I'm getting long in this market, especially on a Monday. But my stop loss will always go 14 points below down there, and my profit target will be 10 times that, 140 points up the top here. Okay, very close to 46.70. And again, a nice day on Monday. And if we quickly run through, you can see that we headed down during the week after, getting quite close to the target. My stop loss is down here at the bottom of the pink area. And on the Friday, it was a bit scary, obviously. You think we're heading back down. But the market finished the week quite strong. We had a public holiday on the Monday here. And as you can see, on the Tuesday, we gap up and then we ride through our profit target the very next Tuesday. Okay, so lots of these figures will just remain the same. We like things nice and consistent. This is the bull market we're trading. Okay, so we want to keep things nice and clean. That took 7 trading days, but that's okay. All right, happy with that. Setup number 3. And again, this is the Tuesday. That was the public holiday. Our stop goes 14 points below if we enter. So as long as the market doesn't travel 14 points down, I'm happy to get long as we go back through the entry there. So 14 points risk, 140 points reward. And as you can see, we almost get there on the very first day. All right, this is the 20th of January. And the very next day, we smash through our target area and we're now out of the trade. And you might be thinking, well, what about all this profit? And you're right, there is more profit involved here, but we are just getting in, getting out, and just happy with our profits that we take each time. So once again, all the stats are the same except the duration. This was done in 2 trading days. So the very next day we were out of the market. We were almost out on the same day we got in. Okay, so setup 3. 3 from 3, that's good. We like that. Okay, I want you to look carefully now. Setup number 4. This is a Monday. This is the 26th of January. And this is our 4th opportunity of the month. Here we go. So now we won't get all the information from this chart. So I'll show you an intraday chart in a second. But here's our entry. We like our stop loss to be below the pink area. And the market finishes back down here in the pink area. We've obviously gone through at some point. What we have to work out for you guys is, did he get in the morning and then the market came back down, or did we fall down straight away and thus I wouldn't have got in as we came back to the entry because it went further than 14 points. So we need to go intraday just to see how that goes. So this is a 1 hour chart on gold. This is our Monday morning here. Okay, so we've opened. We've dropped down. We haven't dropped 14 points down at that stage. So as the market made its way back up, I got into this trade as per usual, as we have done the first 3 times. And then the market sort of marches off northward as we got used to. But then during the day, a bit of a mushroom top here. And right at the end of Monday, we've come back down and my stop loss has been hit. Okay, so if that had happened before the entry, if we'd gone down this far before the entry, I just wouldn't have got into the trade. But I did. Okay, went up, came back down, stopped me out. My stop loss got hit, and then obviously the market headed off upwards without me. So we'll just have a quick look back there. Okay, so yes, market went up, market came down, I got in, I got stopped out, so that goes down as a loss. And as you can see, the very next day, I would have hit my targets up there. Okay, so hopefully you understand that. So a bit of a change here to our summary, that our reward now, we have lost $250 that time instead of the gain which we took on the first 3 trades. Okay, and we got in and stopped out on the same trading day for that one. Okay, but that's trading. It doesn't always work out. That's why we have a stop loss to protect us. And as you can see, our risk is very small compared to our gains when we get it right. And there were our 4 opportunities during January, pretty much 1 per week and at the start of the week. So number 1 was successful, number 2 and number 3 were successful. Number 4, we got clipped out on the same day, and then the market headed up without us. And look what it's done since. So maybe that was a little sign for us. That was our profit target area that I mentioned from the start. That would be from this range here. And the market went through there. So there were other opportunities and methods our students could have used to get from down this area to enter twice, 3 times, maybe 4 times, and then start thinking about getting out of their trades at a profit up here, which would have gained more capital, more profit coming in. I just wanted to show you part of my trading plan, which gets me in and gets me out quite quickly while the market's moving, and I just leave some of that profit on the table, shall we say. But a lot of our students will have a secondary part to their trade where they can just simply follow the market up each time it swings northwards. Okay, so we'll have to look now and see what happens next in our gold market, but we've had a very good time trading it up until now. So we're all very, very happy here at Safety in the Market. Hopefully you can see, the safety part of our name in the way I've shown you how I trade certain markets where we can get in. We're fairly safe, nice reward to risk, 10 to 1, okay, and we can get out quickly before something like this happens, okay? That's the name of the game, and that's why we're called Safety in the Market. So thank you very much, and good luck with your trading through February, and we'll see you in a few weeks' time. If you'd like to know how you can replicate these trades, follow the link below to find out more about our Active Trader program, the course that will teach you how to consistently take 10 to 1 reward to risk trades.